this computer. Okay. Okay. Great. Good evening, everyone, and thanks for coming to today's class. Today's class is titled Task Preparation Training. So I just want to give it a direct focus. Task Preparation Training. That will be the training for today. And we hope we're going to finish within a very short time. So the goal of today's class is to make it possible for everyone and anyone to be able to prepare their own tax, to be able to prepare basic personal tax training, because we have different type of taxes, tax preparation. We have taxes for individual, we have taxes for corporations, we have taxes for estates, we have taxes for trust, we have taxes for non-profit business. So we have different kind of tax preparations that are valid, that tax professionals can prepare. But then it is limited to your knowledge of the tax laws and how you are able to use the software. So everything is gained by experience. I've been doing this for quite a while now. So and I know whoever that is just joining, experience something you cannot read in a book. You just have to experience it, and it's a function of time. So over time, with experience, you'll be able to expand your scope. But on a basic level, it's being able to prepare personal taxes, individual taxes, maybe at a basic level, no matter the complexity, but you have the understanding of what it takes to prepare that. That's actually what the goal of this class is going to be. So that's you're all welcome to tax preparation training. So it's just a recap of what we did yesterday, and I added more so that it makes it really we can conceptualize the whole idea. So to give us, so let's continue. So I'm guided by my presentation so that I can stay within the time and on point. So today's agendas, like yesterday, very similar. I just make some modification to yesterday. So I'm still going to reflect. I'm going to repeat back, recap on what is tax, to really define taxes in case of those that are not here. And moreover, we want to make these videos available for people that are not able to attend, so that they can watch the videos and still get the point of the point of the subject. So the first on the agenda is what is tax. Then we're going to cover the basic tax concept, because the concept is actually what really matters most in tax preparations. The concept could be very confusing, but the moment you get the concept right, then the rest become very ordinary. Then the next to be tax deduction is one of the concepts, but I gave it its own subheading. Then we have the tax credit, because the main tools that we need in tax preparation is understanding the tax deductions and also understanding the tax credit. Why are they important? Because the goal of filing taxes, one, you want to be compliant with the law. At the same time, you don't want to overpay in taxes. When we say overpay, it could be a lot of money. Like maybe you make a lot of people make 100,000 and above. If people make $1 million, $1 billion. So it's like maybe one law, one thing that you don't know can cost you over $50,000 or more. And that cost can be recurring every year and year, because you don't know that you need to claim this credit. You didn't claim them. The government will not come and help you reduce the taxes. The IRA, they won't help you out, because you don't know that you'll be losing taxes. So the whole thing is that you'll be paying more and getting less in taxes. So we don't want that to happen. The main major tools are tax deductions and tax credits. So those are the two major tools that I try to explain them extensively so that we understand them. So the moment you understand these tools and the basic concept of income tax, then you will be able to know how to do the income tax refund calculation. Refund, the goal of tax preparation is to get refund. Refund, positive refund or negative refund. Like, okay, you're going to get money back, or you're going to pay money back. But when you are paying money back, you want to pay the least amount of money legally possible back. If you want to get money back, you want to get the maximum amount of money legally possible for you to get back. That is what is meant by a refund. So how do you calculate that? Based on your knowledge of basic tax concept of what tax is, and tax deductions, one of the tools, and the tax credit, one of the major tools. So when you understand that, then you know how the refund calculations are being done. Then the next thing is that now I've been equipped myself with the knowledge that I need to prepare taxes. Then I want to become a tax pro, a professional that are preparing taxes. What do I need to become a tax professional? Legally, business-wide, professionally, and otherwise. So we're going to cover that in that area. But most important that we use in every industry is software. Regardless of the kind of business you are doing, there's a software for everything. So there's a particular software that we use to prepare taxes. I mean, there are different software that we use to prepare taxes. Then you're going to be introduced to those tax software. That is actually what that will be covered on that area. Then finally, I supposed to have removed that. Finally, we're going to talk about our. After you have learned about the software, I'll show you how to do the software this evening. Then we now introduce you. You want to be professional. You can be a professional working under a business or by yourself. Anyhow you want to operate. At one time or the other, you need somebody to hold your hand, somebody you can call, like a mentor. We have a mentorship and affiliate partnership program. So we mentor you until you become confident, just the same way every industry, like you're a medical doctor, you are this, you need somebody to guide, like a mentor that will mentor you, while you are trying to becoming a professional, to be confident in yourself. And if you run into any problem, somebody you can call. So we have a program to encourage people after they have learned that to be part of us. So I will discuss that. Then we'll open it for question and answer. Sorry, unfortunately, there's no. Sorry, let me. There's no. I think that was an error here. There's no next class. Today is the last day. Today is this for this season. Next class will be maybe next week. Will be how to. I'm yet to decide on what that will be. The next class is going to be how to prepare corporate taxes. So this is about personal taxes. Then my next class will be on how to prepare corporate taxes. Maybe you have an LLC, and how do you want to file the LLC? These personal taxes is what we call the 1040, what most of us are familiar with. It's called the 1040. 1040, we have different series of 1040. That's a topic for another day. 1040 NR, 1040 SR, and different kind of, based on different stations, people find itself. So in our other class, we're going to take care of our 1120S, 1120, 990, and different type of tasks like that. So just like we did today, that would be like that. Okay, so let's move forward. And we'll lay the foundation for our training today. So what is tax? So I already have it there so that we don't get it wrong. So that we get it right. So that when you understand what is tax, it's easy for you to approach it with confidence. So tax is a compulsory financial charge. Please, you have to underline the word compulsory. It's compulsory. It's not optional. It's not or some other type of levy imposed on a taxpayer. A taxpayer could be an individual. It could be a legal entity, like a business, a corporation, by a governmental organization in order to fund various public expenditures. So the taxes is always collected by the government. Though at times a company can collect taxes on behalf of the government in indirect taxes. We're going to cover that, but the scope of our discussion, it is that fee that government is collecting. So the tax is usually determined as a percentage of the income or profit or property value of the taxpayers. That is the way but the direction we are going, because tax is very broad. To be honest with you, tax is really broad. Taxation is broad. So, but we want to focus on the income tax, because there are different types of taxes which I'm going to really explain to you. But our focus is on income tax, and that is what the IRS require for most people, is about the income tax, the income. So taxation can also be imposed on goods and services that are purchased, as well as activities such as gambling and smoking. Taxes are typically used to fund government programs such as healthcare, education, infrastructure projects. By paying taxes, citizens help finance the operation of their government and ensure that the essential services are provided for all citizens. So that is actually the whole idea. So taxes is one of the major revenue sources for government. Government to, like, if you see government as a business, it's like a business. So they make money, they spend money. So one of the ways they make money is through taxes. So those money, that is what they use to fund their program and project that the government carry on. This program includes building of schools, hospital, roads, and all that kind of stuff. So that's the way it works. So, and people, it become part of us. And I read from my study that the first income tax, though there have been taxes over the years, but specifically income tax, even in the Bible, there are taxes, but the taxes specifically on income tax. So the first of its time was, the first one was paid in 1913 in the United States. That's special, this is about income tax. So, which they set it out. That's our focus. So I think that is defined now, that taxes is a compulsory financial charge that is placed on people. Financial charge. So it's not it's financial charge. So we get that clear. So different types of taxes. So categorically, there are taxes that are divided into two types of taxes: direct taxes and indirect taxes. So indirect taxes include income tax. Those are the tax imposed on how much money you make, how much income that you make. We're going to cover the concept of income in our tax concept so that we can understand what is considered income, and what income that are taxable and the income that are not taxable. So they are very technical detail concept that we need to understand. Then we have the estate tax. Someone that is the estate tax is taxes paid by someone that's already dead, you know. So people, they are dead, but they have estate, like they have legacy that they left behind that is huge itself. So they are regarded as estate taxes. Then property tax, the property that you own. It's not the income, you don't make income, but because you own a property, you pay taxes on them. So there's another form of taxes. Then you run a business, corporate tax. Corporate tax is like you run a business, you have a school, you have this hospital, you have this. It's a business, it's a separate legal entity, separate from yourself. Then, and it makes money, it has income, then you need to pay tax on them. Those are an example of direct taxes. So you pay that, just like the diagram you see on the left. Direct tax, person pays tax from own pocket. You pay you write the check yourself. So that is direct tax. But the one that you pay that you don't know, person collect that from your behalf to government. That is indirect tax. Examples are sales tax, for example. You go to Walmart, you want to buy anything, and by the time you pay, you see it on your receipt, 8.25%, something tax. We take taxes from you. Those are examples of indirect tax, and you keep paying those taxes every time. And when those Walmart as a company collect those money, because they sell you a product for $10, on top of that $10, they now take about 8 cents, maybe 80 less than 0.82 cents or so, some cents. They add it to that, you end up paying like $11 with tax. So the remaining difference, the tax on top, they have a way to account for that and remit it back to the government. Most of the time is usually collected by the state and the local government, the county government, that are responsible for collecting those taxes. So we have, that's just basically what it's all about. when you get to, when I was exploring the state of Texas, there are a lot of taxes, different taxes of all kinds. So we cannot cover them, but we just want to limit ourselves to income tax. That is the one that concerns us and what we are talking about. You know, even there are other type of taxes that are attached to your payment, like payroll taxes, social security taxes. All those are direct taxes that you pay from your paycheck. So it's a different, that's a different subdivision of income tax, but we are just focusing on this income tax for now, so that we understand and get the concept right. So let's move to the next stage. You know, now the foundation has been laid now. So we are able to define what is tax, so that when somebody asks you what is tax, then you can confidently tell the person as a tax preparer, oh, what exactly is tax? Do you handle sales tax? You know, people have contacted me multiple times. There's another thing we do in Texas called franchise tax. If you don't pay franchise tax and you run a company, business, you register a business in the state of Texas, whether you make money or you don't make money, they expect you to come and report you make a report every year and pay. If you, based on how much you make, then they will expect you to pay a franchise tax. If you don't pay the franchise tax, they revoke your right to do business in the state. So it will be on the system. So nobody, if you want to do business with anybody and they go and check you out from the Secretary of State website, and we show that this business does not have the right to do business in Texas, in the state. So that's if you take it to court at that time, you have no right. So it's like the business is dead. So people have contacted me before. That's not, I won't say it's not part of income tax. That's another type of tax called franchise tax. I still handle them, help them. But what I'm trying to explain is so that you know where to specialize. You know that you can know the different types of taxes that are available, so that you don't really mix them together. Oh, some people I pay about the mortgage, the tax for my county, the property tax I'm paying on. That's property tax. It's not about income tax. But then there's a way you can regard an expense. It's part of deduction. You can, because you spend money from your pocket, but that's not part of your income. It's not business income tax. That is regarded as a deduction. So all those kind of things, you just need to understand the difference so that the customer does not push you here and there. But if the concepts are not clear, they will just be that you don't know what you are. You don't know what you are doing. So the customer will definitely leave you. And also, I would say is that the major part of a tax preparer job is actually advisory. You advise clients, or they'll call you to ask questions, to advise them. You want to do this, you want to do that, because they believe that you are a professional. So you are always on top of things, especially the law, the changes in the tax law. So they expect that you know. So those are the things they need to seek your advice. And when they ask you questions and you don't know, oh, what is child tax credit? I heard that government you don't know, because you don't have a foundation on the way the system works. Then you'll be losing customer, you'll be losing reputations and so many other things. So that's why the foundation, the understanding is really very important. And that's why I'm going to really build it on the tax concept. And these tax concepts are based on my personal experience of over 10 years of the kind of things, customer that I come in contact with, and the questions and the returns I've done. So I just really want to believe that it is enough for you to get you started. And you have resources like the IRS website and other places that you can go and really learn more. Google is your friend. You can go to Google any concept you don't understand, Google it, try to get the understanding. If Google is not okay, go to YouTube, watch the videos, and you see. And if any of them do not satisfy you, reach out to me, you know. So if you reach out to me whichever way, either through my social media channel, YouTube or whatever, then I'll be able to assist you. Then, okay, now we're going straight to the first concept in the tax system, in the tax concept is the filing status. So what is the filing status? That's the first thing they want to know. Filing status is a term used to describe the legal status of a taxpayer when filing their taxes. So it determines the type of tax form you must use the amount of taxes you owe, and any deductions of credits that you may be eligible for. Tax filing status include single, married filed jointly, married filed separately, head of household, and qualified widower with dependent child. Each status has its own set of criteria that must be met in order to qualify. So the first thing is that everybody that files taxes, you must fall into either of these. A single person by filing, technically, because there's not a legal marital status, it's a legal filing, is a filing status. Though it is really like connected with marriage, because you see, like whether you're, because if you are not married, you are regarded as single. It's true, but in the language of taxes, it might not necessarily be the case, because you are married. Maybe you are married and your wife is in Nigeria, in another country, and your wife does not have connection with you. You are the only one that is here. Then, okay, if you say you marry, you cannot claim that you are married. You are single in the system. So that's actually the example. Is that you are single. The best form is that you are single. It doesn't mean that you have to go and, because it's going to mess things up. You have to need the information about the wife. Does the wife doesn't have a social security number? If you don't have a social security number, there's no way they can file for you. Because anybody that you want to put in the system, either your dependent or your spouse, they must have a social security, a tax ID, a social security number. And if you want to apply for the person, that means you cannot file it electronically anymore. It has to be filed manually. And if there are errors, there's no way you get a response immediately. But if you file electronically, if there are errors in your returns, the system will tell you, hey, there's an error. But now, so a lot of problem will happen that you rather be advised. Please, I know for tax purposes, let's make it single. Okay, I understand I'm single. It's not that you are lying, but that is the language of taxes in the context of tax. So I'm just trying to explain that. Then for married, we have married filing jointly. You are married and you are filing jointly with your spouse. The benefits are enormous. Your tax rate, your tax bracket, your income, your deductions are more. So you see, like if you are married and you actually file with your spouse, then you're going to pay less in taxes because there's like a 2-in-1. Okay, so the two is like they'll see the two of 2-in-1. Let's say you make $100,000, and somebody else, you are married, another person is not married. Technically, in the face of the law, in the way the tax will see it, as if you have done 50,000, then they are going to tax you based on 50,000, not based on $100,000 that you made because you are married. That's in case your wife wasn't working or have no income. So that's the only idea. So the benefits are more. Then when you say married filing separately is that it happens at times when you are married, but you do not want to file return with your wife for whatever reason, including maybe if your wife is owing some money to the government, they are going to garnish the money, or yeah, that's one of the common reasons. Or maybe your spouse too, she doesn't have her paperwork ready together. You are Ghana, but she does not want to share the financial information with you, or her tax situation is complex. Or two, you need your tax too for some other things to you. You need to use your own document faster. And you cannot lay hold on your wife or your spouse or your husband to get the paper. So you rather file marriage separately and damn the consequence. So it's able to use that. Then we have what you call the head of household. So the head of household is someone, because the household, you have an address, you are living in a home. There must be a dependent. You are the one that is responsible to dependent. That's actually what it means. So this dependent can be your children, it can be your family member, your parent, and all that. So the requirement will be explained. You study about that. Then we have what we call the qualified widower with dependent child. Somebody just lose its spouse and they have a child. Because the tax system is designed, is a form of social engineering, just to really create a kind of a balanced society, you know. So it's not really like, it's not a straightforward, it's not a linear thing. So they consider that somebody is money the spouse, then the system will still regard the person as filing marriage jointly. Though the husband is dead, but they will still allow him or her to file with the husband, but it will specify that is for 2 years, so that they can get a tax break for those 2 years. That's why they that's why they designed that classification, so that that way the client will pay less in taxes, and when you pay less taxes, then you get more money from your refund. So which is the whole idea of a tax preparation, so that you get more money for the client. Because if you don't know, you don't know. So those are the technical details, you know, like so we'll cover them at the time, so that when your customer come and you'll be asking them questions. You are like a doctor, so you just be asking them questions. So then you now be administering solution. Okay, or if that is the case, then this is what you do, this is what you do, this is what you do. So because everybody's cases are different. So now let's move to the next slide. So now dependence. Who is a dependent? How does RA define dependence? And that concept that we need to understand. The Internal Revenue defines a tax dependent as an individual. A dependent is an individual. A corporation cannot be a dependent. It's who is claimed as a dependent on individuals or married couple federal income tax return. A tax dependent may be a child, parent, grandparent, or other relative of the taxpayer. In order to qualify as a tax dependent, the person must meet certain criteria set forth by the IRS. This criteria include how much financial support is provided to the individual and whether they are US citizen or resident alien. Before you can claim somebody as dependent, it doesn't mean that because somebody is your child, it's become automatically your dependent. If you are not financially responsible for that child, you might find it difficult to be able to claim that child as your dependent. Or if you yourself, you are dependent on somebody. So how can you be a dependent? You are dependent on somebody. Then you want to claim somebody again as dependent. Those are the kind of situations you will find. So maybe they don't have job, they depend, their parent claim them as dependents, and they have children. They cannot claim their children. Because if they do, they cannot get money back. Even if you put in the system, they will ask you, can anybody claim you? If you say yes, or you have been claimed on somebody else's return, and you want to claim your child, sorry, it doesn't work that way. So those are the things, and the other depends on the length of time the person have stayed with you. You have to live with you for more than 6 months in a year to qualify as a dependent, and also you must also be responsible for more than 50% of the person financial upkeep for you to be able to lay claim over the person as your dependent, because you're going to get some qualify you to entitle some credits. Credits are money that is given to you to pay your taxes. So, and if you don't have much tax to pay, then those money will be refunded back to you. Now we've done with dependents. Then the next thing is to cover is the concept of income. What is the definition of income? Income is defined as money or other form of compensation earned from employment, investment, or other sources. So generally, income includes wages, salary, bonuses, commission, tips, rent, dividends, and that. So some related terms include earned income, unearned income, taxable income, no taxable income, gross income, adjusted gross. These are some of the related terminologies. Anyway, these are going to be recurring in the course of our discussion, as we go on. So let's not waste time about what is income or what is not an income. But we're going to still meet it in the next slide. Now, part of the income, we have because of taxable income and non-taxable income. Not every income that is subject to tax, some of them are tax-free. And so examples of taxable income includes wages and salary. They go to tax it. You may go and do job. Then commission, you work. Maybe you work for my business now for Optimum Tax Pro. You to refer customer to me. You know some people that need to do their taxes, and you refer to us. Okay, and for everybody you refer, I'm going to give $25, and you end up referring almost 100 people. So $25 times 100, that's about $2,500. That's how much money you've made. So that kind of income is not a salary. It's neither a salary nor wages. So it's the guy's commission that you earn. So it's taxable. Then tips. You work at a restaurant, they give you tips, different from your salary that you make. Those are taxable income. Bonuses. You work out, your boss was satisfied with your performance. Maybe your salary is $2,000 a week, and they have to give you a bonus of $1,000. So your money has increased to $3,000. So $2,000 is salary, that $1,000 is bonus. So that's the way it works. The capital gain, with exception of one, which we'll cover later in this. So capital gain, like you have an asset. Capital gain, you have an asset, then you now sell it. That is a capital gain. So, or you have an asset, could be like property, could be stock, could be anything you regard as an asset. Then when you sell those assets, when you sell those to exchange for money, the difference is the gain. So you have to pay taxes on them. And it's taxable. Though meanwhile, they fall in the way their taxes are different. The tax rate and all that, the way they are considered are different. So that's a different subject anyway. So the only one that is not one exception is when you sell your primary home where you are living. If you sell it, you're not going to pay taxes on them. It's non-taxable. I mean, it's non-taxable, yes, if you're permanent resident. The income from that, there are other conditions as well. Anyway, maybe you stay for some specific period of time. The law changes every time. So income from freelancing, self-employment, or businesses, royalty and rental income, some interest and dividend, gambling winnings, unemployment. These are all taxable. These are all taxable income. Then you collect, if you are collecting child support payment, you are not going to report child support payment as an income on your taxes, because it's non-taxable. It's non-taxable income. They are not going to tax it. Interest from municipal bond, this is municipal, when you buy some bond from your council. Life insurance proceed, you collect life insurance. That or any form, yeah, that is not considered taxable. Disability benefit, if you get paid the premium for disability for your policy, is not taxable. Capital gain from the sale of your primary residence, limited to $250,000 in gain for a single person. Those are what I'm saying. Then you collect gift or inheritance. Those are not taxable income. So there are still many other, but to drive down our point, these are categories, these are types of taxable income, and these are non-taxable income. Now, we want to go into this one, and here we're going to have some exercise too. We're going to do some exercise, gross income. Gross income. What is the definition of gross income? Gross income is the total amount of money earned before any deductions or taxes are taken out. It is the sum of all types of income, including wages, salary, tip, bonuses, interest, capital, and that. So now, so yesterday, one of us asked a question that, okay, you have a W-2 income, you have a regular job where you get paid, you earn W-2 at the end of the year, which you call W-2 income from wages and salary. Then you also have investment in stock, in stock and some other property that you are selling. Those are if you leave them, there are two ways. You leave them, they generate interest for you, or you invest, you get some dividends, returns on those money. Those are interest. So that's another money that are coming to you. Then you also have a side hustle. Maybe you have some business that you do, LSC here and there, or you used to get some contract here and there, you make money from there. Then some people, you make some money through your gift and inheritance, or different kind of different sources. Somebody dash you money. Those are, at the end of the day, you have to aggregate all those money together. When you bring all those money together, they form your gross income. That is the gross. The total money that come to you in that year. So you have to do an account of all the money that come to you in that year. So that is your gross income. The sources are maybe different. So therefore, the way they are taxes, the way they'll be taxed are going to be different as well. Then now, the cost of gross income is to now take, for you have those gross income, not all of them are taxable, that the government want to come after you on taxes. Maybe your income that year is about $200,000. And all of a sudden, maybe somebody now will the property to you, like inheritance. Maybe you have been good to one rich man. You now say, okay, now in my will, I'm going to give this person $5 million. That $5 million you have to know is a gift from inheritance. So it's not going to be taxable. So you should know that one. It's not going to be taxable. But if you don't know, somebody can come to you, all those lawyers or something, okay, the taxes is not taxable. So that's what you are learning from here now. So I have this simple exercise. If you get the answer right, please type your answer on the chat box. I have Mr. Robert Green and $75. Let me note whoever that got it right. So he makes $75,000 in wages, $1,000 in taxable interest and dividends, $10,000 from side hustles. Then he has $5,000 in gifts and in gifts from grandparents. So what is his gross income? Please select one. We have A for 80,000, B 81,000, C 75,000, D none of the above. I want to know who will get it so that before we move to the next day. I'll give you 30 seconds. If you know the answer, type it on the chat box. I'm waiting. Okay, end of the story. Okay. I have someone that said the answer is C. I still waiting. In fact, I'm still waiting for more answers. More answer. Mr. Robert Green earns $75 in wages, $1,000 in taxable interest and dividends reported in 1099 ANT, 10,000 from side hustle, 5,000 in gift from grandparents. How much is Mr. Green gross income? Okay, somebody say it's that is A. Okay. The correct answer is A. The correct answer is A. So I have the correct answer. Let me know the people that get it right. Mr. Victor and okay, Bura Baru. Sorry, I did Bura Baru. I'm going to give you, I might likely give you some gift at the end of the class. Then it's Mr. Kolidoye, Kayode Kolidoye. Okay, got the question right. So the only part, the only one, the gift is not taxable. So they are not expected to get any, to be part of the taxable income. So now we're gone. Then I think we're done with the, okay, we're still on tax deductions. Okay, tax, okay, hold on. Okay, I have that, okay. Oh, okay. Okay, that's okay. Now we're going to next in our agenda is tax deductions. So a tax deduction, what is a tax deduction? That's another tool that we're going to be using when we are preparing taxes. We're going to come across every time. Customer is going to ask you, you're going to come across your software. A tax deduction is a reduction in the amount of income that is taxable. Now, if it is a flat amount that the IRS allow you to reduce your taxes based on your filing status, the IRS allow you to choose between deducting your itemized deductions or the applicable standard deductions. So for standard deductions, and these are the scenario, I'm going to explain so that we don't really, so that we don't, so that we look more interactive to us. In the earlier discussion, the earlier slide, we were able to calculate the taxable income by Mr. Robot. So the government is going to tax you based on your taxable income. So they're going to tax you taxable income based on the taxable income. Here with the taxable income of that guy was $86,000. So imagine if they were to tax in at the rate of 22%, depending on the tax rates, the tax bracket, and the tax rate he falls into. So you can imagine how much money will be. But now, because of deduction, he's going to reduce his taxable income. So when he reduces taxable income, the taxes can go down because tax is a percentage of your taxable income. Taxes is not a percentage of your income. It's a percentage of your income that can be subject to tax, which is taxable income. So your job as a preparer is to bring down the taxable income to the barest minimum, so that even to zero or negative, or so that at that level you pay zero in taxes. So that's actually your goal. But then everything you have to be done, it has to be legal. You can't just be doing deduction without really knowing what you are doing. There are two forms of deductions that are allowed. The first one is called the standard deduction. The second one is called the itemized deductions. This standard deductions is a fixed amount that the government allow you. So in this current tax season, which is year 2022 tax that we are going to be filing now, no matter how much money you make, if you are single and you are filing marriage separately, the government give you $12,950 as a standard deduction. So meaning, like this guy, Robert Green, his taxable income is $86,000. If he were to be single, we have to take away $12,950 from his income. So whatever that is left, which is 12,001, this is 3. Now his income now is become $73,100. That $73,000 is now the taxable income after deduction have been taken from it. So that is now the deduction income. Imagine if he were to be married and is filing marriage jointly. Instead of the 17,000, instead of taking away $12,950, they are going to take away $25,900, which is going to be another $12,000 again, which is going to be like about $60,000. So the taxable income is becoming lower and lower. So from $86,000, but just because of his filing status, he has jumped from 86,000 to 61,000. That is the power of the tax deductions. And when you know it, then if we were to be head of household, it's a little above single and married filing separately, but it's below the married filing jointly. It's 90,400. That's a fixed number. You can't do anything about that. Those are the deduction that is allowed. Now, that is that. Now, imagine you take away the standard deduction. There are other deductions again, like you contribute money towards your retirement plan. Though they have caps of how much money you can contribute. Like this guy now, the one I give as a scenario. Jason is single with 2 kids. He made $52,000 in 2022 from the W2 job. Had standard deductions and $4,000 of pre-tax contribution. Calculate his taxable income. So this guy now he has $52,000. That's how much he make. Then that's how much he made, $50,000. He has because he's single and he has 2 kids living with him. So this guy is going to qualify as a head of household. So as head of household, his standard deduction is $19,400. So you're going to take away that one away from it immediately. This is 6. Then from 2 will be like okay, 1 with 2. Then with $32,306. Now, because not only that, $32,600, that was when we take away the standard deduction. Now he now has another deduction, which is a pre-tax contribution towards retirement for $4,000. So you take away $4,000 again. 0, 6, 32. That's 32 plus 1. That is 12, 8. Then his income has reduced from $52,000 to $28,600 because of the deductions. Now, instead of this guy to be taxed at $52,000, but because of the deduction, you have reduced his taxable income to $28,600. That is what has happened. So now the answer here is none of the above. So the answer is $28,600. That I just want to use that to illustrate the concept of deductions. Now, if this guy do not want to claim the standard deduction and want to choose that, okay, the standard deduction is based on what the government had decided, because before it's based on the concept that before government can tax you, it must make sure that you survive first. So the government believe that if you are a single person, you can survive on $12,950 in a year. So it's enough for you to survive. So if the only money you make is $12,950 and they are taking about $2,000 from your refund, from your check, by law, when you apply the standard deduction, they will return the $2,000 back to you. So now you pay 0 in taxes because you don't make enough money to justify why you must pay. Why no, not that way. Why they must collect tax from you? Because they're going to you're not going to be. They don't want to make life difficult for you. That is the concept of tax standard deduction. If you are married filing jointly, or you have a wife, at that too, they believe that you must your standard deduction for you to survive is 2 people now. You need $25,900 as minimum as a baseline, whatever, to survive. So that is how much they will first take away from. If you are working and the only money you make in a year is $30,000, they are going to take away 25, and you are married, they are going to take away $25,900 from that money. So all the money they have taken away from your paycheck, from your W-2, the withholding tax, the federal withholding tax, they're going to refund it back to you because of that standard deductions that you qualify for. Because it's going to bring your income, your taxable income, from $30,000 to just less than $4,000, $4,100. So the only income of yours that is going to be subject to tax will be $4,100. So government is trying to be fair so that you don't see that in as much as the government will need money, they need to be fair on the citizen. So that's actually the whole idea of the tax deduction. Now, let's say you have other projects like you want to attempt, maybe you want to run business, you make like about $200,000. That $200,000 is a dream. You have a dream to build like $1 million business. You have a dream to build maybe a big hospital or something you want to build, and you need to finance this money. And all the money you make is about $200,000. And you put about let's say like $150,000. You spend $150,000 to develop that business. But they have some, they will allow you to take this off your things. That is called itemized deduction. You can deduct that $150,000 you spend on business, so that they will not, so that at the end of the day, you make $200,000. Your itemized deduction is $150,000. So your only money, no, your itemized deduction is $170,000, for example. Oh, let me say, no, $180,000, no, $160,000. What am I taking? Because I want to, let's say, okay, let's say you make $200,000. So now, and you are married or you are not, you can deduct even all the whole money, or maybe like 180 or 170. So that the only thing that is left is about 10,000 or 5,000. That 5,000 that is left is what is going to be subject to taxes. If your employer have taken like $200,000 now, they have, you know, with $200,000, you make $200,000. You might be surprised that the taxes they're going to take from your check, they're going to withhold, from your check, maybe up to about $30,000 from $20,000 at that rate. But because you deduct you claim itemized deduction of $160,000, which is allowed, then you can get all the money back. All the money they have taken from your check, you get it back as refund on your tax return. That's the way it works. That is the whole idea. So that's why they know that they cannot limit everybody to standard deduction alone. So they now give provision for itemized deduction, so that you can itemize what you spend the money on, but not on not everything, not on a stupid thing. It has to be something that is really allowed. So there are code that you have to check that is permittable. For example, you need it to produce another money anyway. So that's actually about the tax deduction. Now, we have another concept which I call the tax exemption. Tax exemption works similarly to tax deduction. It exempts you from paying taxes. Just like some churches where they make money, they don't pay tax because they are exempt from paying tax. Go find for organizations like non-profit, they are doing charity, is tax exempt. So they don't really. So portions of your retirement income, you get some money, they don't subject to tax, you don't pay taxes on them. But there's some money you make from government, like what's it called, like this unemployment is still subject to tax. So those are the things that, and some portions are exempt from taxes, like unemployment checks. So portions are, so it's what the law says that really, but it's more to keep track of all this. The software is there to help us keep track of whatever is acceptable, whatever is this and all that. But you, as a preparer, will be the judge to make sure that everything is working as supposed. Then we now go to the next one, which is called the tax credit. So it's another tool for a tax preparer, because I want to be familiar with the tools, please. That's why I'm trying to explain all these things. Because if you don't understand the tools, you're gonna really find it difficult as a tax preparer. So we have different tax credits at dollar for dollar reduction in the amount of tax you owe. You know, deductions. Tax deduction, what it does, it reduces your taxable income, so that the taxes, your amount of money that is subject to tax is reduced. But tax credit, on the other hand, does different thing with the hope of making you pay less in taxes. It helps you to pay, is dollar for that to help you to reduce the amount of taxes that you are owing. It's a tax break that they give to you, so that the credit will be applied to any taxes that you are owing. It does not reduce your taxable income. They also, what it does is to reduce your taxes. Let's say you have a taxable income of $100,000. Based on the tax bracket that you belong and all that, you'll be end up paying, maybe you are supposed to pay like $20,000 to government in taxes. And you have a tax credit of $10,000. You will just apply the credit towards paying your taxes. So your taxes now will become $10,000 instead of $20,000 you're supposed to be paying. And if your tax credit is $30,000 and your taxes that you are owing is $20,000, so you will apply the $30,000 to the taxes that you're supposed to pay. So the remaining balance, you have minus 10,000. So that 10,000 that is minus, it will return back to you. That is called the tax, because the money you now get money back. You'll be wondering, how do I get money back? Because of the tax credit you have. And the tax credit is refundable tax credit. There are tax credits that are non-refundable. That is only applicable to paying taxes. You can only use for paying taxes. If you don't use it on paying taxes, you can't use for something else. Just like people that use food stamp, they give you a food stamp. It's a form of credit. You can only use to buy food. Even it has to be raw. They even specify it has to be raw food, not prepared food. You must use it. That's the way the credits apply. There's some credit they give it to you, like the stimulus check. They don't tell you what to do with it. You can use it for whatever you want to do. So that is the way the taxes and all the refund work. So now we're going to talk about some major tax credits that a tax preparer always come in contact on a daily basis, on a regular basis when you are filing taxes. Those are the ones I would like to discuss here. So we have what we call the earned income tax credit. I have another slide where I'm going to explain that in detail. We have the child tax credit, we have the education tax credit, we have the retirement savings contribution credit, then we have the American Opportunity Tax Credit. So I'm going to explain those in different slides. So now, we have what we call the earned income tax credit. If you look at the word earned income, that means there are some income that are not earned, meaning that you do not sweat for them. You do have to go and work, spend your time, spend your skill to earn that money. It's not like something that just comes. It's not like they have it's not like residual income. Maybe like you have renter, you rent some people some houses. They just pay you rent. You are landlord. Just any money as a landlord is not an earned income. Those are not. It's called unearned income. So it's not qualified for credit. They're not going to give you credit for that kind of income. If that is how you are making money, no income for you. So those is not subject to income. So the only income that is subject are earned income that you make from by working. So the income is a tax credit that help. They are actually designed for low and moderate income working individuals and families to reduce their federal income taxes. So they know that the people that make the economy work just to encourage people to work. That is why they created that income, that credit, I mean. So you must make less than $50,000 a year and have children, dependents, before you can qualify. No, people without children or dependents do qualify anyway, but it is really very low. But the more children you have, maybe you have up to 3, based on that, you see you make a lot of money. I'm going to show you the chart. So it is designed to supplement wages by providing a refundable tax credit for eligible taxpayer, which means that even if the taxpayer do not owe taxes, they can still receive refund. So they know that you are working, you have 2 or 3 kids, and you only make $4,000 a whole year, or even some people make $10,000. They have 2, 3 kids. So the government is wondering, how do you survive with 3 kids, and you have to pay your rent and this? The only money you make in a year is $5,000. So in that case, they give them money back. That is earned income credit, tax credit. That's how they. So it has to be, maybe if you don't have a job, you have a business, you could still qualify. Maybe your business is catering, your business is still an income, your business is janitorial services, or whatever you are doing, you are teaching, that is an income, and you are making money from there, and you have kids, and you are married, you qualify for the income. You don't make more than 50,000. You are low income, you get that kind of money. So in our market, in our tax business, that kind of people are many around us, and they need our help to claim those credits. Because people that maybe the whole year, so maybe they have 2 or 3 children, and the only money they make in the whole year is about $30,000. And you can help them claim this credit as a tax preparer. Maximize the claim. Maybe they get like $6,000 from this credit. They also get $6,000, maybe $6,000 from another credit, from another credit, which is tax credit. This one, I'll show you the table. They might get like $6,000, like because they have 3 kids and they don't make more than $5,000. That is free money. It's not from deduction, it's not from their taxes. It's a credit which is refundable. That's how they get the money. And they have children. We have what we call the child tax credit, CTC, $6,000 again. And they go to school, they are struggling, going to improve on themselves, acquire some skill. They give them credit again. At the end of the year, you can help such a client make like $12,000 back in a year, in a lump sum, $12,000. You will appreciate it. You will know what to do with that kind of money. So those are the kind of situations and the scenario we find ourselves. Oh, thank you, Francis. You were able to get me $12,000. Somebody that make a whole year $30,000 in a month, you only make about $2,500. Then you will be wondering, how does it possible? At the end of the year, they give me one lump sum of $12,000. He will be so appreciative. It's because of this income tax credit that happened. So let me give you the tables and give you links. There's a link here. Maybe I hope I'll be able to come back to you. So these are the tables on the RS website. I won't have time. Those of you that want to join the program, join our program, we'll be able to take you through all these. We'll be able to show you detail. This is a tax rate and EIC table. So if you see my screen now, I'm going to show you like, this is a table. This is on the IRS website. You see, if your taxable income, if the amount you are looking at from the sheet is this. So you look at this table based on if you are single head of household and this, you look at them, based on how much you make. So it's like a 4-figure table I was saying yesterday. So you can know how much you qualify for. So let me show you some example of people like, you see here, people that make between 18,000 to 1,400, they make from 3 children, they get about $6,935 back, just because the taxable income is just maybe the AGI is 18,400. Not the taxable income this time around. That's a different concept. So it's going to get about 6,900 something. That is the way you look at the table, and that is what the software tool does. So that's actually that is. Because of our time, we might not be able to finish us, but I think I'm sure you understand the concept. Then we have another which called the child tax credits. Okay, I think Anas is going. Okay, so we have the child tax credit. The child tax credit is a tax credit designed to help family with dependent children. It's a family tax credit that reduces the amount of income tax owned by the taxpayer. The credit is available to taxpayers who have at least one qualified child under the age of 17 and who met certain income criteria. The amount of the credit is based on the taxpayer's income, number of qualified children, and other factors. So when we say age of 17, we refer to the tax year. So if you have a child that is going to turn 18 this year, but last year the child was 17 years old, is still qualified because it's going to be based on the age of the year of the tax year, not the year that you are filing the taxes. So that you can. So these are a couple of the questions the taxpayer will be asking you. Oh, my son is going to turn 18 this year. Can I still qualify for? Yeah, he was 17 last year. This year is 2018. I'm not filing 2023 taxes. We are filing 2022 tax in 2023. It's different from, so the taxes we are doing is the tax of year 2022, because everything you do from January 1st, 2022 to December 31st, 2022 is what we are filing in 2023. So the age is based on your age of 2022. If you are filing back taxes 2021, you based on the age of 2021, 2020, and all that. So that's, so you can still claim that. So sorry, I forgot to tell you. Somebody can claim, if for any reason you do not file your tax for this year, you can claim your back, you can do a back previous tax filing and still claim your return 3 years behind. So if you qualify for some money previously, you'll still be able to qualify, you still be able to claim those money for the previous years that you haven't filed. So you can choose to file your 3 years return together and get all the check at the same time. But it's not advisable anymore. So now we have the child and dependent care credit. That's under credit again. You know, when you have children and you need to, they want to put everybody to work. If you have to, the child and dependent care is a tax credit that helps family with dependent children or other dependent who require care in order for the taxpayer to work or look for work. So you know, if you need to go and pay nanny, somebody to take care of your child, so that you can go to work, there's a credit for you. And also there's a deduction on those expenses as well. So the whole idea is to help you, help the system going. So that system going, God so it's a system going to help the family. The goal of the government is to create a better society, make the citizens happy and all that. So that's why these credits and programs are created. So it can help you offset the cost of child care, after school program, and other types of dependent care expenses. The credit is available to try who paid for the service, why they work for this. It can be claimed on Form 2441 and can reduce tax liability of the dollar to dollar. So that's the whole idea. Then we also have the education tax credit. So an education tax credit is a form of financial assistance that helps to reduce the amount of taxes you owe. So if you are in school, you go to school, you're going to get credit for going to school. So that if you are owing $2,000 in credit in taxes, you can use the credit to apply it and pay for your school fees and pay for your taxes, because the government is encouraging you to go to school. So that's what the tax credit is all about. It's available for students who are pursuing post-secondary degree or certificate and can be used to offset the cost of tuition, books, and educational expenses. Education tax credit can provide significant savings on taxes owed and can help make higher education more affordable for many people. So it's a way it's a tax-based way for government give you money, free money. So retirement savings contribution credits. Retirement savings contributions is a tax credit designed to encourage individuals to save for retirement. It provides a tax credit for up to 50% of the amount contributed. So the whole idea, because you'll be wondering, why am I spending my time on all this? I want to understand. You are not customers are going to be talking to you. Your taxpayer are going to talk to you. They're going to ask you questions. You have to, if you don't really know it, you won't know what to tell them. Then also, your software is already designed to guide you through all this. So I'm just creating awareness about what the software is doing, so that just to get you prepared, so that when you start seeing the software doing them, you appreciate all the things. And also the customer you are dealing with them, because like, for example, where they have the retirement savings contribution account now, they will give them tax paper at the end of the year, because everything you do with people, it has to be reported back to the IRS. That's why everybody must have a tax ID. So the government, the IRS recognizes you with your tax ID. So your tax ID, if you are a resident, if you are an American citizen or a green card holder, a resident alien, you have what we call the social security number. Your social security number serves as your tax ID. So with the tax ID, they have an online account for everybody. Just like in their portal, you go to the IRS website, you see rs.gov/online account. You can Google it online at IRS online. You can Google it, IRS online account on Google. It's going to take you to that page, and you log in, you verify yourself. You're going to see all the places that you have worked, all the financial transactions that you have with people. They will send out all the details there. So and then they will send you a copy, whatever the copy, just like they send you W2 copy. They will send a copy to the IRS. They give you a copy. So the same copy they give to you, you carry the same copy and come and give to your tax preparer. So as a tax preparer, you ask them for those copies. Where are your tax paper? Please put them together. They bring it before you. Then you begin to look at them. Then you'll be matching them with the software. Then you can look up, you can call up the forms from the software. Okay, you put the information right in the software. Okay, this one is 1099 INT. You look at the software, where's 1099? Okay, put it this one. What is tax ID? What is this one number? You follow it, you do like you are doing data entry. But if you don't understand how they work together, it might not really make sense to you. So that's why I'm trying to explain all these things to you. You don't need to memorize anything. Just remember what I'm saying, and if you need to refresh, go back to these videos and watch it again. You see it to be okay. Then I forgot to tell you that if you are not a Greek, card holder, and you are not an American citizen that have a social security number, so there's what they call ITIN. Government allow people that are not qualified to have a social security number to have a tax ID, which they call individual tax identification number. That is for people that do not have a social security number, so that they can report their taxes as well. So, and if you want to tag them to your taxes, you need them, you can tag them. Some cases that we face, oh, my wife is in Nigeria, yeah, and I'm this or okay, you want to report them, cool, you can report your wife on your return. But your wife must get a tax ID. So what does it need to, your wife must be identified, we can do that. So you can get your wife a tax ID, then you report your wife on your taxes here. So, or anybody that you work for, you will get them. You don't need to be in America, or you don't need to come to America or be in America to do that. I offer that service as well. We can help you find your tax ID, get you a tax ID number. As long as you have a passport, international passport to travel, then we have to make that issue is authentic. Then we verify your information. We connect with you via Zoom. Even if you are in Nigeria, you show your passport, we connect you via Zoom, you send your document, we file the application on your behalf to the IRS, and the IRS will issue you a tax, they will issue you a tax ID. So that tax ID you can use to file your taxes. So that way, that means if you qualify for some money, then you can get it. So that's actually, so some of the credits that are designed for American citizens, not for non-residents. So even if you get a tax ID, you might not be able to get your maximum credit, except maybe on the rare cases that may be credit for non-resident or non-citizen. So most of the credit program are designed for American citizens. So that's why at times if you should go and spend money, do all the while to get your tax ID you cannot claim any benefit on somebody that is not an American citizen or resident. So that I want you to get it clear. Because if you have children abroad, you have children that are not American citizens and they don't have social security number. All they have is a tax ID. They cannot claim any credit. All the money you get is from credits. It's not it's not because you work. So you may maybe qualify for that. So that's that. Then we have the American Opportunity Tax Credit. This is another form of education credit that are designed to help people that go to college. The first one is the one that is used for people that are going to undergraduate program. But okay, yeah, I think, oh yeah, it's the same thing. Okay. The American Opportunity Credit is a tax designed to help make college more affordable for later. Yeah, it provides up to 25. It's another type of form of credit for 4 years of post-secondary education, including tuition and other diseases. Is the refunded credit, mean that if the credits exceed their tax liability, they may be received. So, yeah. Then I'm trying to confuse with this one. There's a lifetime learning credit too. These are education credits. It's a tax credit for higher education. So if you finish high school, maybe 4-year college, and you are going for higher education like master's or doctorate, you still qualify for some credit. Designed to help reduce the cost of tuitions and not especially related to post-secondary education. The LSC can be claimed up to 2,000 per year and is available for both undergraduate and graduate studies. The LSC is an important tool for those seeking to further their education that can help offset some of the costs associated with higher education. So the reason for showing you all this is, were you in school? Were you do this? If they say yes, okay, can you give me the information about your school? Boom, you put it there. Maybe the system get you like $2,000 more. Oh, I get you. Oh, they'll be happy. And if they go to sometimes they doesn't know about tax credits, the education credit, that's how you will have lose the money. So it's a $2,000. $2,000 is a lot of money. So you make somebody to make $2,000 and you ask the person, okay, pay me my fee, $500. You won't complain now because you help the person to make money. 2,000, I make 2,000, so that's the way it works. Now we are going to the income tax proper. So that we're almost finished. Just income tax calculation, we're almost getting there, finished for today. The tax rates, in these sections, I want to understand what they call the tax bracket. The way the tax system works is based on tax brackets. So there are tax bracket, 37%, 35%. The more money you make, the more taxes they will tax you. So we're going to look at the table. But anyway, there are 7 tax rates in the American tax system. So the first is 10% of your taxable income. The way they calculate, I'm going to show you the way it's calculated. 12% of your taxable income, 22% of your taxable income, 24%, 32%, 35%, 37% of your taxable income. So you see the way, I'll show you the formula so that you see the way they calculate, so that you know how to plan for it. So it depends primarily on your filing status and on your tax bracket. So if you know that if you are married, that being married alone can save a lot of money in taxes, you better remain married. Because if you earn so much money and you realize that if you are married, you're going to save you like maybe it's a lot of money. You want to stay married. But if you are married, then it's going to put you on a different tax bracket and that kind of thing. So those are things you need to understand this so that I can use them to plan your taxes. That's what we have under area in taxes we call tax planning. So okay, we have another area in taxes we call tax planning. So with your tax planning, you can avoid paying taxes. Because people like Donald Trump, they understand all these things. Jeff Bezos, they understand all this. That's why they don't pay dime in taxes and they make millions. So because they understand the way the tax system works and they're able to make their plan so that they can minimize or even avoid paying taxes at all. It's legal, is allowed by law. You can avoid paying taxes, but you cannot evade taxes. So let's continue. So I'm going to use this example to use the example of Mr. Green that we had the other time. So if Mr. Green, the taxable income that we got the first time after deductions have been taken off, after deductions, before deductions, just get before was $86,000. So you can do deduction later. Let's say we have not taken any deductions. We just want to use them. So if he were to be single, this is the tax table that we're going to use, and he makes $86,000. So following this table, Mr. Green is going to fall on 22% tax rate. So the tax, it's not that it's going to pay 22% of $86,000. Please get it right. It's not paying 22% of $86,000. It's going to pay 26% of 4,000. Yeah, 4,807.50 plus 22% of the amount over 41,775. That's the way that is the way it's calculated. So you get the screen, you can always get, that's the way it's calculated. 22%, there's a initial, if we are to represent mathematically related. They got this thing, you see, like 41,000, that is the last, they make the 12% of 41,000. It's a kind of math, but you can, mathematically, you can find the formula, the mathematical formula, so that you just fit the number. That's why it's easy to draw for computer to calculate it. So, you know, your computer will do the calculation for you. If you want to do the manual calculation, that's why you do it. So that's the formula. But how did they come about this 48,000? Okay, look at the 10%. If your taxable income between 0 and $10,027, so your taxable income is 10%. So let's say you make 10,000. So not that you make your taxable income, if it's $10,000, then you fall on the 10%, the first tax rate, which is 10%. So your tax that you owe will be 10% of 10,000, which is $1,000. That's how much you're going to be. That's how much you are going to be owing in taxes. So if you were to make that guy, okay, let me use this on the simple one, not to waste our time. So imagine if your amount you are owing taxes is 1,000, and you have some credit and deduction here and there, boom, at the end of the day, your tax, everything is reduced. But let me take you to the second slide. So if you are married filing jointly, now, it has to be 10% of zero, between 0 and, see the money, instead of 10,000 something, it raises to 20,550. That is this, they still tax you at 10%. That is that rate that is taxed. So you see, the tax rate, the tax bracket is wider for married filing jointly, and the rate is the same, which is almost double for when you are single or you are married filing separately. Yeah. So when you see, married filing separately is more or less the same way as if you are single, because the system does not want to, they don't want to encourage singleness or married filing separately. So it favors when you are married. And when you are married, it's very unlikely that your income exactly double. If you make $100,000 as the husband, it's like that your wife will make like $70,000. Or if your wife makes 70,000 or something, 170. So at the end of the day, your income is going to be like, it's going to even up. So if one is working and the other one is not working, it favors you. So whichever way you dice it, it's profitable. It's tax-wise to be married within this, so you fall within this. But we can look at those formulas later. So when you are head of household, you see it's a little above the bracket is a little expanded from 10,000 to like 14 days. That's the way it works. And then the same formula follow the same thing. Yeah. Okay. Now, so this is just I'm just saying we're going to, this is just an intro, because you may not be able to understand this for the first time, but I just want to create the awareness for you to have an idea. If you are going to do a Google search, you are going to do some research on your own, or you are going to ask me questions when we'll be working with live cases, of customer, then you will understand that, oh, this is how we arrive at this, what they already. So, okay, can't you get me more money? You know, when some customers are becoming stubborn, oh, how come you cannot get me more money? I went to this person, he got me more money, you cannot get. See, he's not getting you more money, he's not stealing money. He's just using where this is a system. They've already said it is like calculator. You cannot get more number than what is in the calculator. So nobody can get you. So you'll be able to convince them, please, anywhere you like, go. You cannot get something different. This is the way it works. And when you demonstrate knowledge, understanding, expertise, authority to clients, they will respect you and they want to do business with you and they want to feel safe. Because one thing about the taxis, it's like you're driving. You don't want to run. You don't want to get into an accident. Accident is that when you get into trouble with the IRS, they start running after you about audit. They audit, they prepare, they audit you. They'll put you on the call, they'll be asking you questions, they'll ask you a technical question, you don't know what you are saying. Oh God, it could be so frustrating. So you want to give people the peace of mind, the confidence that they are dealing with somebody that knows what he's doing, that is not going to put them into trouble. You get me $10,000, it is $10,000, I'm going to sleep. RS is not going to knock on my door. Next day, say, Benny, Mr. Man, come and explain to me, how did you get this thing? You claim this, you are not supposed to claim that. You claim this, this charitable contribution, you claim that, you claim all this. Oh yeah, I don't know. I'll just put in the system because the way I taught, that's the way they taught me in use the software. To be honest with you, most tax office, they teach you software. They are not teaching taxes. That's why I don't teach software. I introduce software to you. So when you see, I'll teach you the concept, the principles, so with that concept and principle, then you can use it and apply it on any software that you choose to use. So just like driving, you know the principle of driving, you can pick any car and drive. But some people, they will teach you only on how to use Pro Series. If you don't see Pro Series, you cannot walk. So because you memorize everything, that's not a pro. So now I've done with the calculation, you have an idea how to calculate the whole thing, it works. Then because of time, maybe I'll have another session again where I will actually do more examples, or we'll do some real one. So now, becoming a tax pro. How do you become a tax pro? That is what this session is all about, and it's the last session here. So I'm trying as much as possible to finish within 20 minutes so that we can all go and sleep. Then I'll make this video available. Then whoever that miss any part of it can go and watch it later on YouTube, and then watch it later and get the missing part. So becoming a tax pro, what are the things that you need? What you will need? The way it's structured, you need a tax company with eFIN. That is number one. What is eFIN? Is electronic filing identification number. If you want to do anything with the government, there must be an assigned number they use to recognize you. So most of the time, you want to buy software like you want to do anything in this country, you need your tax ID, your social security number for whatever. So if you want to deal with the IRS on a business level, you need eFIN. It's called electronic filing identification number. Before they issue you that eFIN, they must make sure you have no criminal record. They are going to do fingerprint on you, and it's going to take about 2 months for the process to complete. So it's a long process. You cannot go and apply overnight one day now. You want to do it. No, it's already late. People that does that start, maybe you start around August. Then you apply, they send you letter, you go to their website, you do all the, you fill the form, you provide the information, they run through your background and make sure that you are not into any kind of financial crime. Then they award you the eFIN number. That is called the eFIN, electronic file identification number. That is step number one. Because I know many of why that's why I say now you need to join a company that already have eFIN so that you can work on that day, which is your first year. Even if you have an eFIN system, you still need you still need to work under somebody so that they can coach you, even if it's for 1 year before you start your own business. You can learn. So that's the way business works. You have a mentor, a coach you. And we are open our platform for you, Optimal Tax Pro. Anybody, whether you're part of this and you want to work with us, or you have experience, you can join us. Reach out to me through this video or any other channels. Then we accommodate you. Then number two, you need a tax software. So everything you communicate with you have to prepare the way the tax software works. You need the tax preparer to prepare the taxes. Then you need the tax software to manage your business. You have to manage your business of taxes because there are other things that are going on within the tax software. There are other people like other banks that you work with because we give people money. Those are discovered for other time. So it's a platform. The software is a platform. It's not just to prepare taxes. You manage relationship with other partners. Manage with other partner, manage with other partner. You also use the structure to communicate with the IRS. So it's not that you just used to prepare a loan like in the olden days. You go to Walmart, you go and buy tax software. You download on your computer, you prepare taxes, then you now print it out and go and mail it to the IRS. No, you do the actual mailing today. You communicate with the IRS through the software. That's why they give you the EFIN, the electronic file education number. You know that this communication is coming from Optimal Tax Pro. So they register in their system. So that's what the software does for you. So you used to prepare the taxes because all the forms they are designed, according to by the software company, recognizing all the tax laws, all the codes, everything already there. Then we manage the taxes relationship with everybody, with the bank, with your customers, and your software and other, even the loan officer, people that give some loan and all this, even insurance, because there are insurance, error and omission. When you file taxes, you can actually get a business insurance. So all the things are managed. Then you communicate with the IRS as well, and also communicate with your client. So you need the tax software, but you don't need to buy it because the tax software is already purchased. Because you need an EFIN number to buy the tax software. You cannot go and buy tax software without an EFIN number. They won't sell it to you. The software company, they will never sell a professional tax software for you if you don't have an EFIN. That is the first requirement. Go and get your EFIN before they buy you the tax software. So it's not possible. I've just given you an understanding that, okay, if you want to become a pro, either you work with somebody or you want to set up your own business. But regardless of the way you go, this is the route to take. Then the third thing you have to do, obtain your PTIN. PTIN is called Preparer Tax Identification Number. That is the one that they used to recognize as a preparer. So as a profession, just like somebody open an hospital now, when you open an hospital on its own has its own license with the government to register as an hospital. Then the individual profession like nurses, doctors that work in those hospitals, they also have their own licenses, like the licenses and IDs to work in those hospitals. So in case there's any problem, they can now know where to track it to. Because you can have a business now and somebody can use your EFIN and prepare fraudulent taxes. Something that is not that's not fraudulent, that's dubious, do some things. So they'll be able to trace it down to the EFIN and trace down to the PTIN. So that's the way you need a PTIN. But if you don't have a PTIN or you have reason, maybe you are not on top of your taxes or for whatever reason, that government may not allow you to get your own PTIN, or you are not in the United States, that you qualify because you don't meet the requirement of filing to get a PTIN, you can work under somebody that has a PTIN that will review with you. So you can be like administrative staff, you can be like an assistant. If you want to work as an assistant, you don't need a PTIN. You just be an assistant to somebody, or you are afraid. Some people are afraid, you don't want to get into trouble with the IRS or anything. So you can still be working as an assistant under somebody that trusts you. You work on somebody EFIN, so it's allowed within the software. But you won't be able to come, you won't be able to transmit anything to the IRS directly. It has to go through the person that you are working under to make it that possible. Then the number 40 you need marketing. It is through marketing that you're going to get to your customers. So marketing is my fault. I know I can help you set up social media marketing, how you can use maybe in another class again, we can show you how to get customers from Facebook, how to get customers from social media, Facebook, Instagram, and TikTok, and WhatsApp. So you can get customers like that. So that's actually that, but that's a different thing. And if you already have no people within your sphere of influence, They know you, they trust you. Who you can, that's where you get customer, because the whole where you're going to make money is from the customer. When you help them file their taxes, claim all their credit, make money, then they pay you for the service. That's how you make money. That's how it's a business. So marketing is you have the skill now. You need to connect to people that will make the money happen. So that's why marketing is important. So that's all you need. Then the next thing is that what will you need from taxpayer? This question is usually being asked. Okay, if I want to do taxes for somebody, they will ask me, what do I need? So Francis, what do I need to bring? What do I need to bring? That's the question people always ask. First thing is that people that are involved, we have the taxpayer, we have the spouse and dependent. I'll say, okay, you need the social security cards or number. We ask for cards because some people they can miss. They can, if you don't put the name correctly the way it is, your name can be Wole something, and maybe on your social security card is different from what you carry on your W-2. Some people, because maybe their name may be difficult to pronounce, and the employer will just put anything on their W-2. So, or some other documents anyway may not be. So your correct name is the one on your social security card. So you ask the client, can I see, give me a photocopy of your social security so I can see what's their first name, their middle name, initials, and their last name. You have it correctly. Then for themselves, for the spouse and their dependents, you need a current driver license. So if filing married jointly, so date of birth of taxpayer, spouse, and dependent, if applicable, then for me this, that, those are then we need income information, then we need vehicle information, all kind of information. Ask them. I'm going to go into details of all this when you are practicing. Then we need deductions. If they have, you ask them questions. Anyway, I have a form. We already have an organizer of the kind of like a form where I'm going to show you in the next slide. So where customer will go and create an account, the question will be asking them a lot of questions by themselves. Or you as a preparer, you'll be guiding the customer, asking them this kind of question. You'll be looking at the organizer. Okay, this or where they'll be telling you, or they can fill the form by themselves. So at the end of the day, you gather all the information that you need from the customer. So by the time you get the information you need, then the next stage is how to put them in a software. Yes, and that's it. So now put them in a software where you are going to be filing the taxes. So this next and this last slide is our introduction to the tax software. So I'm going to make sure I finish within the next 10 minutes so that we can go to sleep on time. So if you are still with me, please type number 1 in the chat. And if you want me to continue, please type 1 on the chat. If you enjoy my teaching, or if you have any comments, let me just give 1 minute to receive your comment. Just put 1 on the chat. Thank you. Thank you, Mr. Victor. Thank you, Mr. Karaday. Thank you, Mr. Dorothy. Thank you. Thank you, everyone. I appreciate that. So this is the last part, which is introduction to the software. So now the software I use, there are so many software in the market. Myself too, I've used a lot of them myself before I zero down to this one called My Tax Prep Office. I'm not marketing for them. So, but that's I'm just telling you the software I use. I used to use, I started with the one they call Pro Series. Pro Series, you have to install it on a computer. At times they have the one they call the network version. You have to put your network versions and all that. So it could be, the problem with that one is that if you travel, you don't have access to your computer. So it's a desktop based, It's really very cumbersome. I don't like it. There's another software too, like Drake. We have Drake. Those two have different versions and all that. We have Tax Layer. We have Tax Act. We have different software, to be honest with you, within the tax. We have one called ProTax Pro. We have different kind of software. I can remember the list of them is a lot. So, but the thing that, and then we have software that are good in preparing personal taxes alone. There are some that allow you to do business tax as well. So, but this one is able to do personal taxes and business taxes, and it's web-based. I don't need to install it on a computer. So it's just on the, I just need to create a user account for everybody that's going to work with me. And I have the right to create unlimited user account. So there is no limit to numbers of users. I mean, numbers of tax preparer I can have. So whatever you are working on, you only see what the administrator or they allow you to see. So like you can only see the return that you initiate by yourself. If you are preparing this return, you only see your own return. You cannot see somebody's return that's been prepared, so that you don't mess with somebody else's return. So if you are put so that as administrator can look at what you are doing to review it before we send it. So it allows for a lot of administration. So regardless of where you are in the United States or anywhere in the world, you can log into our software, do the taxes, then boom, you are good to go. So this is the, I think this is the page. The one thing about this software too, it has some features which we're going to use to sell our tax preparation business. So if you are, I assume many of you, virtually all of you, if you want to be a tax preparer, you're going to work with us. Or if you want us, if you don't want to, you just want to get the knowledge, you're going to allow us be the one to be your tax preparer to do your taxes. But I just want you to see the back office, the way we work, and some of the features. So now I'm talking to you as if you want to be a tax preparer. So now we have the client portal. This client portal is where this link is where we send to this link is where we send to our customers to initiate their process. So I'm going to give you guys, so you come across somebody now, you send them this link. You don't need to say, okay, send me your paperwork, all this kind of, some people are scared. You send it your WhatsApp, you send an email, everything is mixed up. You cannot really get access to that. You just send me this link. Let me open this link now, you see. This is the link now. You see, it's co-branded to our name, Ultimo Tax Pro. So if it's a new customer, they need to create an account. If it's an existing customer, they will have to log in with their email and password. They will get into their account. Then for a new customer, they will see create account. So the account, they put their email address. I can send this link to people. Now I want to do my tax. Okay, I'll send you this link. They themselves, they put their email address, their first name, last name, social security number, phone number, password to create an account. You see, if you look at, you see the security, the lock on the browser. That means this communication is secured. Nobody can intercept. Nobody can intercept the communication. Nobody can intercept the communication. Nobody can intercept the communication between the user and the server, where the file is going to get to. So that's actually the whole idea. So they see it, and that's the first stage of this software. Good part. So more software. So that way, when they log in, you'll be able to see the questionnaires are there. You'll be able to answer the questionnaire and all that. So as way to test, I'm going to share with everybody. Then you're going to start by even use it to practice. Put yourself as if you are the tax preparer, as if you are the, what's it called? You are the taxpayer. So you fill the form and explain how the software works from a user perspective. Now you're not going to switch over to become a preparer perspective. That's the first stage of the training. Then the next stage is So the next stage will be the preparer training. We can gather personal and tax information with the client, exchange important document, send tax and state return, request signature reporting. So it does that through the client portal. Then these are the task preparation training. All these trainings, a video that already exists, so you don't really need any. That is where I structure the training. If you get to our program, this is where you're going to be trained. How to log into the My Type Prep, this is a video. How to change your password. After I create a password for you, can change it. How to navigate the dashboard. There are more training videos. Then these are practice scenarios. So I'm going to open this for you to play just 1 minute video. You see, these are. So I'm going to share this link with you. Sorry, you see. So you see, the videos are on YouTube anyway. How many minutes? Oh, sorry. So how to change your password. So those videos are already on YouTube. So you don't really need to worry about them. How to work with the navigations. There are more training videos. This on the website. Oh, so please order. Sorry, I mean. Okay, so sorry for that. Okay, now, okay, these are the training. You're going to find more training, on this on the website of the software company. You know, see the software basic navigations, how to add brand products, how to do anything you want to do. You will see short videos on them. So these are one of the things I choose them. So it makes the training really simple. You know, every software is about practice. You practice it, and so then the other one I want to show you is like, you know, we have this I call a practice scenario. These are practice scenarios. This for me, I have about 13 practice scenarios. So these are the scenario that you're going to choose to practice while you are still. You can use real life practice return number 1. You're going to see like, okay, this one have this healthcare. Okay, Pandocerosa Pine is unmarried and live in Atlanta, Georgia, with a 6-year-old son, Sports. Pandoraza was full-time as a botanist at the University of Trees. Pandoraza and her son are both U.S. citizens and cannot be a qualifying child or dependent on anyone else's federal tax return. She provided proof of maintenance of the household, including utility bills and rent receipt. There's an evidence that Ponderosa paid more than 50% of the cost of keeping up the home in which she and her son lived. She lived in the US for the entire year. Ponderosa provided you with a copy of her driver license. The number is this, issued in Virginia, VA, or on this date, and license expires on these days. You know, the taxpayer details, name, this, that, date of birth, email, occupations. These are just the details. These are the things. So the dependent information. This is the dependent information on the son. Name, social security number, monthly discharge, income, how's it called, healthcare information, due diligence. So these are the real papers submitted. But meanwhile, this scenario is for 2019. You can change them to 2022. I'm going to change them to 2022 anyway, so that we just modify all we need is the data. So the scenario doesn't really remain the same all year round. So it's so that is the way. Okay, for rent, these are the paperwork. You know, they make real stuff. These are the stuff. These are the documents you collect, W-2. So you pick this one yourself, then you use to practice. So I have a solution set, sort of solution for them. So when you finish with that one, there's this scenario 2 again. Let me put scenario 3. Then we'll call it this scenario 3. Okay. So Bassett and Greyhound are married and live together all year 2022. Anywhere you see 2019, we change to 2022. In marital, the couple has 2 children, this or this. So technically, from my years of experience doing taxes, by the time you do the first 4 or 5 scenarios, you have captured almost 90% of people that you're going to come in contact with on your own. So by the time in 2-3 in 1 week, you can patch all the scenario. You know, you call me, you answer, check the answer. We're going to put everybody in a group. You see it, and then you good. So by the time you try with your own return, see what you get, refund you get back, try with other people. Now, before you know, you're already prepared. and then you're already in business. And the last part I'm going to cover a few minutes, like, okay, so we have our tax and business. This we're going to discover that. So we already be business. The average money, the average cost that we charge for tax preparation fee for personal is about $400. So about $400, that's how much we charge for tax preparation. So imagine you do 100 returns. Maybe if you are working by yourself, that's about $40,000. That's how much you make. And you can do 100 returns under 1 month. Even you can, let's say you are able to do four returns per day. 4 returns per day, you can do about 100. That is what in 30 days, you do 120. There's nothing stop you from doing like 10 returns per day. Because to complete 1 returns, you can finish in 30 minutes or so. Or even, yeah, between 1 hour, if you know what you are doing, and sometimes are small. So technically it's like, if you do like 200, you make about 80 grand in a month for the tax season. So, and there are people that are making more like $500, $1 million. I've worked with a guy that make $1 million, you know. I've not been fortunate enough to make $1 million during tax season, but I thank God we're not doing badly. But that's actually the whole point. So we have a program we're going to introduce you to, and tax business is something you do. It's not something that's going to be stopped at any time soon. You're going to be taxed every year in, year out. Even if you are old, 80 years, you can still be a tax preparer, people will still trust you and bring their tax to you. So you still be going to be doing taxes. So, and it's not location dependent, everything is online and all that. So we have our program, you know, we bring you in as an affiliate partnership. You refer customer, because the customer, you work with us, then we share, we'll pay you commission. So we pay you commission, therefore, whatever you want, because we're going to support you, we're going to mentor you, we're going to provide you with the software, and then we're going to provide you with our experience, intelligence, and that we've get over the years. And we're going to show you the tools of our trade, how we do it and all that. So it's a lot of value that we are giving to you. And you can choose to be working with us, or you want to choose to work with somebody else or open your own store. I'll be glad to support you at any time. But there's a fee for joining our program. And the fee, you don't need to pay the money right now. You can pay it from the money you make. But just the things that there must be a fee, you have to pay. So, and then we have a payment, we have a structure. So the best of the structure is about 50. You can make up to 50 days on your performance. You can get 50% commission or whatever you refer for the tax preparation fee. Because you yourself, you're going to be the one monitoring it. So if you don't want to prepare it, maybe you want us to prepare for you. These are your customers. We can also prepare them for you. We have a fee we charge you for the cost of preparing the taxes in actual sense. Then the preparation fee. Then there's a way we do the calculation by the time we are in. They just need to get it done. So, and do you have any question at this time? I'm sorry, time is already past. It's 9 o'clock now. 2 hours have gone. Do you have any question? Please, I want to hear a question. Are we still out there? Okay, one has dropped. Okay, so anyone that would like to join the program can reach out to me. My number is, please, I made people to register, but some people do not really get that. Let me just put my number on the screen. So you can reach me on my number directly, 972. No, okay. 972-639-2478. No, 78. That's my. That's my number. So that's my number, and my name is Francis. My last name is Ibikunle. Optimum Task Pro. Yeah, so our website, www.optimum. To learn more about us, you can go to our website, optimaltaskpro.com. You can learn more about us. So I want to believe everybody has no question, is satisfied. So in the absence of no questions, we're going to be ending the class for today, and look forward to hearing from you soon. Thank you, and God bless you all. Bye.